Among today's big market stories, Chinese tech and electric vehicle stocks coming under pressure again following more talk of regulatory crackdowns. Eunice Yoon joins us right now live from Beijing. And Eunice, this is starting to sound a little bit like a broken record.
Yeah, definitely. The Financial Times says that this time round, China's regulators look as though they want to break up Jack Ma's super app, Alipay. So the idea would be to get Ant Group, which currently manages the payment system, to separate out the loans business. So there are two units, Huabei and Jiebei, and those would be completely separated from the rest of the financial services. Also, the company would be required to create an app solely for the loan business. The user data would be handed over to a credit scoring JV, which would be partly owned by state enterprises. And under the new plan, Alipay, which currently boasts over 1 billion users, will no longer be able to check the creditworthiness of its own customers on its own. And then the loan business has been a huge driver for growth for Ant, accounting for 39% of revenues in the first half of 2020. Now, the FT says that other online lenders are going to face similar requirements. One of the reasons why we saw the tech sector in Hong Kong rattled more broadly. In addition, the IT ministry said that Chinese tech players will have to be sure to end a long-running practice of blocking each other's links on their own websites. That Beijing says needs to happen, or they would face the consequences. The IT ministry also took aim at EV players, saying that China's EV sector has, quote, too many electric vehicle players and is in need of consolidation. And so the latest August data shows that China has more than 329,000 new energy vehicle-related businesses. Of course, a lot of that is because the policy here has been promoting a lot of these businesses.
Yeah, reining things back in after all of that. Most of those EV companies in extended hours turned around. I think BYD still under pressure, notable because that's the one that Berkshire Hathaway owns a stake in. But Eunice, let's talk just about this idea of cracking down on tech companies. Cathie Wood last week was adding to companies that she thought were trying to do a good job of appeasing the Chinese government when it came to these things. Is that the sense that you get there, that companies are working hard to try and figure out how to avoid additional regulations coming down, that some are maybe doing a better job than others of that?
Yeah, absolutely. I mean, there are a lot of companies that have been scrambling, even when they're not asked to try to accommodate or at least have their best guess as to what the next regulation is going to be for their sector. I think another way that people are kind of sifting through the tea leaves is to see, say, for example, in the EV sector, whether or not the government is going to particularly target bigger players, or are they going to actually try to promote smaller players? So for the EVs, the target is actually the smaller players. In the EV sector, the tech regulators were saying that they want to see bigger players become even bigger. So maybe that's one of the reasons why you would see, say, BYD, which has been a traditional player for quite some time, suddenly see its stock rally, as opposed to some of the other sectors where the government has been trying to crack down on, say, Alibaba or Tencent in order to try to encourage the competition for some of these middle-level players in those sectors.
Yeah, a lot of thought that needs to go into this process if you're an investor looking at any of these sectors. That's right. Eunice, thank you. It's good to see you.